Minister says that the town has seen a wipeout of nearly 15,000 crore rupees worth of orders and a 30% cut in production. Andhra Pradesh will see investments by theme park operators Wonderla and Imagica. The government says Wonderla Holidays will open its next amusement park in Vizag, while Imagica World has picked Tirupati for its development. In an ET Now exclusive, Freshworks President and CEO Dennis Woodside tells South Central that the Chennai and San Mateo-based SaaS major has crossed AI-driven revenues of $20 million with 6,000 customers now paying for AI products. Bengaluru-based co-working and managed space operator Beehive has raised $400 million in a pre-IPO round. The company will use its latest infusion to focus on capacity addition and expansion. And as the uproar over the government's decision to rename the MNREGA scheme continues, Karnataka Deputy Chief Minister D.K. Shivkumar challenges the centre to change Gandhi's image on currency notes. Our top story first. It's been a crisis that has been brewing for nearly 6 months now. But Tamil Nadu Chief Minister M.K. Stalin may have just hit the panic button on Tiruppur's textile exports. In a letter to Prime Minister Modi, the Tamil Nadu Chief Minister highlighted what he called the humanitarian challenge that the irreparable damage the Trump tariffs have caused to Tiruppur. Stalin said that losses of 15,000 crore rupees in confirmed orders have impacted the town's export business, while exporters continue to bear losses of up to 60 crore rupees per day. His letter said, and I quote, "In Tiruppur, the knitwear capital of India, exporters have reported a staggering wipeout of 15,000 crore rupees in confirmed orders, coupled with enforced production cuts of up to 30% across units. New orders are also drying up at an alarming rate. This has translated into a combined daily loss of 60 crore rupees in revenues for exporters in Tiruppur, Coimbatore, Erode and Karur districts, pushing many small and medium enterprises to the brink of collapse. A similar dismal scenario is witnessed in our footwear clusters in Vellore, Ranipet and the Tirupattur districts." End quote. Through the letter, the Tamil Nadu government has now requested the centre to prioritise resolving the issue of tariffs through bilateral agreements, with the Chief Minister emphasising that a swift decision would revive export fortunes and reinforce the country's position as a reliable global manufacturing hub. Meanwhile, the Andhra Pradesh government has announced that the state will attract 2 amusement park investments, one by Wonderla Holidays and the other by Imagica World. While Wonderla's next park will take form and shape in Vizag, Imagica is exploring Tirupati to build its theme park. The announcement by the state's Principal Secretary for Tourism comes even as Andhra has said that tourism would be a top priority sector in the state's economic development plan. According to the state government, Wonderla's theme park is expected to be a 50-acre development, while Imagica's project in Tirupati will take shape on a 20-acre land parcel. For Visakhapatnam in particular, the announcement comes even as the city has emerged as a front-runner in Andhra Pradesh's recent investment tally. The city saw 66 investment proposals at the state's investor conference last month, totaling to a whopping 11,092 crore rupees. That's more than half of the second-placed Tirupati, which saw investments tally to around 5,300 crore rupees. What has been of particular interest in the investment in tourism and hospitality in both towns. For instance, Vizag is also seeing 9 hotel brands planning to add 1,880 keys with a cumulative investment of 2,916 crore rupees in the city's hospitality industry. Tirupati isn't too far behind either, with hospitality brands planning for just over 1,000 rooms at an investment of 1,123 crore rupees. Well, good days then for both Tirupati and Vizag in Andhra Pradesh. But on to our big exclusive of the day now. Chennai and San Mateo headquartered SaaS major Freshworks has told ET Now that nearly 6,000 out of its 75,000 customers have begun paying for any one of the company's AI offerings. In an exclusive chat with me earlier today, Freshworks CEO Dennis Woodside said that the company was confident of having all of its customers pay for AI eventually, which he projected to soon be a multi-$100 million business. Dennis also said that annual recurring revenues, or ARR, from Freshworks AI business had crossed $20 million, and the company was in fact looking to keep hiring across roles in Bengaluru, Chennai and Hyderabad. Here's a slice of that conversation.
Fire Hydrant brings to us the deeper capability in an area called IT operations management. So think about an IT department that has to respond to outages or service degradation. They have to scrum, they have to do root cause analysis, and then they have to actually solve the problem. Fire Hydrant software enables them to do that.
Right, and it's interesting that you've made this acquisition at a time when there's been so much focus on AI and the kind of role that AI will in fact play in SaaS. Does the acquisition itself have any synergies with the fact that you are shoring up on AI capabilities, and what's the correlation really?
Absolutely. So our entire Freshservice product is moving from reactive support, reactive service to a proactive stance, and AI allows us to do that. Fire Hydrant is AI enabled, so the software itself, the AI, will understand all of the inputs that are coming in, alerts and so forth, and will parse out the alerts that actually matter from the noise. So that allows the operations management team, the IT team, to do its job better.
Right. So the Fire Hydrant team and the Freshworks team, will there be a synergy from going forward? How does that match up even as the acquisition is completed?
So it's very similar to our Device 42 acquisition of about a year ago. We have over 20,000 customers that use Freshservice today. We intend to sell Fire Hydrant into those customers. Many of them want a deeper IT operations management solution. And then we intend to invest incremental engineering resources here in Chennai and in Bangalore and in Hyderabad to bolster the Fire Hydrant product and make it even more performant and allow them to move their roadmap forward faster.
Right. Have you arrived at a number in terms of what the investment would be like going forward?
Well, we have a good sense for what the business case is because we understand how many of our customers today are already using our native IT operations management product. So we have a good sense for who we're going to be able to sell Fire Hydrant into, what customers might actually want it right out of the gate.
Right. Moving forward, Dennis, we're speaking so much of AI and these synergies that you will become part and parcel of the work that you do here in Chennai and all the world over. But I read something very interesting recently in that a lot of the AI activity going on at multiple tech firms, yours included, has now moved beyond the trial phase, and there are actually customers paying for AI services, SaaS and beyond. What are those numbers stacking up like here at Freshworks? A large chunk of your customers, I assume, would be paying. What is that number?
So as of the last quarter, 6,000 of our customers are paying for one of our AI products, which is a large number. And that customer base is growing by leaps and bounds every single quarter. Earlier this year, we announced that our ARR from our AI products exceeded $20 million. So that's larger than many startups that are kind of getting to scale. And it's very fast growing. That business has doubled year over year. So we're seeing AI adoption across our customer base. Now, we have 6,000 customers paying for AI today, but we have 75,000 customers. So you can see that customers are at different phases of adoption. We have some that are super leaning in. They've enabled all of their agents with our Copilot product. They're using AI Agent to deflect queries from customers and employees. We have others who are just starting to get started.
Right. And have you worked out what that growth number would be like in terms of customers paying for AI? It's 6,000 right now. How quickly would you like to scale this up? And is there a number in mind that you want to scale this up at the rate of which?
Well, we think over time, all 75,000 of our customers will use AI. It's just like mobile. It's just another way of computing. And we've embedded AI into all of our products, both the customer support products and the IT products. So over time, we think everybody's going to use AI, and that number is just going to continue to grow.
Right. And an annual recurring revenue, like you said, of 20 million is no mean feat, given the fact that, like you said, it outstrips ARRs at multiple AI-first companies itself. Do you have a guidance on how this growth will pan out and what this growth would be like? You are 20 million today, but in terms of AI-led ARR, how quickly do you grow?
Well, we think that AI, for us, can easily be a multi-$100-million business very quickly. We talked about that at our Investor Day back in September. And it's because so many customers are going to see benefit from AI in the next couple of years.
Right. So what are the key focus areas for you, even as this AI influx is well and truly on at this point in time? Do you want to double down on certain areas, certain products, and use AI capabilities because you see a big market that's there and thereof? And if yes, what are those focus areas for you?
So our focus from a product standpoint continues to be what we call employee experience. That's our products for the IT team and for teams outside of IT. And then customer experience. That's for customer support teams. We have large companies like Mahindra here in India and Tata who use us on the IT side. We have companies like Purple and ACO Insurance that use us on the customer support side. We're bringing AI across all of those products, and that's really exciting for us.
Right. While we speak about AI itself, the last few months, I've spoken to a fair number of fintechs and banks
Yes.
And software firms that support banks. And the one consensus that's been doing the rounds, Dennis, is that while a lot of companies are really accepting and adopting AI, in the finance space, a lot of banks are perhaps a little reticent, waiting for regulations to probably catch up before they go all in and adopt AI itself, given the fact that it is so regulatory driven, an industry like banking itself. Do you see that to be the case as far as financial spaces and BFSI sector is concerned, that could perhaps be the last of the companies or the verticals that end up accepting and adopting AI to all its potential?
Well, today we're seeing AI across every industry, whether it's financial services or manufacturing or e-commerce. We are seeing small businesses adopt at similar rates to high businesses. There isn't really a specific industry that's leading right now, and we think that that's going to be the case for some time because so many businesses and industries are going to see benefit. Of course, in more regulated industries, there's a lot more to think about. There's a lot more that you have to worry about. But those industries also are adopting at really healthy rates within our customer base.
Right. Before I end, I have to ask you, Freshworks has seen quite the journey right here in Chennai where we're doing this interview. You've expanded both within and outside as well. What is the headcount at present in cities like Chennai, Bengaluru, and Hyderabad? And in this AI era, when so many companies talk about maximizing revenue per employee, will you expand the headcount going forward in these centers?
Yeah, so our headcount globally has been around 4,500 people for the last year. We have over 80% of our employees in Chennai, Hyderabad, and Bangalore. We're hiring across all roles, so tell your friends. We have about 14,000 applications come in every single week. We're hiring for AI in particular. In fact, we use AI to help us screen those resumes so we really find those who are really well qualified to work here. So we're continuing to invest in our teams and in our people, and I think that's going to continue.
So all this talk about AI, the adoption of AI scaling down or shoring down on hiring is perhaps not entirely true, and companies like yourself continue to hire?
Well, what we're doing, and a lot of our customers are doing the same thing, is we're repurposing people into jobs that are more interesting for them, that have better career paths over time. An example is most of our customer support work now that used to be done by humans is done by AI. AI is either helping a human or entirely handling the inbound question from a customer. That's allowed us to retrain those people into more proactive roles. So we're what we call premium support, where customers pay us for a higher level of support, into sales roles. So I think that's what we see with our customers too. A lot of customers are repurposing smart, talented people who understand their business and products into other roles that are more valuable for the business and help them grow.
Right. And last question before I let you go, you spoke about products. Pricing strategies have always continued to be in the spotlight ever since SaaS and AI met in the middle not too very long ago. Have you figured out what pricing is like at Freshworks post AI adoption? And if you could give us a case or an example in terms of how it works today as opposed to in your pre-AI era, what's it like today?
Well, the model that's really growing for us is more of a consumption-based model where customers are paying us per session. So a session is an interaction between one of their customers or an employee and an AI agent, where the AI agent solves the problem instead of a human. So there's no seat license there. What we charge for is that interaction, and that's about 49 cents a session. It's a really good deal for the customer of ours because the fully weighted cost of actually answering a question can be far higher. But that's really what's scaling, and over time, that's going to create a really big business for us as well.
Absolutely. And do you plan to then scale up on the number of AI agents? I mean, Satya Nadella was in India recently, and he spoke about how Copilot will now see a lot of AI agents doing jobs together so as to ensure that you have full stack AI agents at play. Could that well be the case here as well?
Totally. Yeah, we're following that strategy. So we launched in November AI Agent Studio, which allows any of our customers to create their own agents, to integrate those agents with their existing systems. So the agents can take actions. They can issue a return authorization for a product that you might have bought. They can change a flight. These are the things that our customers want the AI to do on their behalf, and those agents are in production right now. We have many customers that are using them.
Well, Dennis Woodside, they're confident that eventually all of Freshworks' 75,000 customers will eventually adopt AI, and not just adopt it, but become paying customers of these products. Well, moving on now, Bengaluru's largest co-working space operator, that's Beehive Workspace, is in advanced stages of raising 400 crore rupees as part of the company's ongoing pre-IPO round of funding. Beehive has said that the funding will comprise a significant debt component from a consortium of lenders, along with equity infusion of approximately 100 crore rupees. The equity round has in fact seen significant interest from HNIs, family offices, and multiple investors who already have Beehive in their portfolios. In a release, the company has reiterated a solid growth outlook. Beehive has said it is on track to cross 500 crore rupees in revenue by FY28 and 1,000 crore rupees by FY30, driven by campus-led expansion strategies, deeper enterprise penetration, and a diversified portfolio spanning co-working, managed offices, virtual offices, and flexible access products. Joining us now to walk us through some of those plans and talk us through some of the specifics on where that money is going is Beehive's founder and CEO, Shesh Rao Paplikar. Shesh, good to have you with us on the Bulletin. First question, you've just announced that you're in advanced stages of that pre-IPO round of 400 crore rupees. Firstly, congratulations on the announcement. What will this infusion bring to the table really, and what kind of leverage will this allow you at Beehive?
Thank you so much. So one is that capital. So Beehive is in a business which is a co-working and managed office, and similarly to how a hotel industry also is, this is a very capital-hungry business. Every time you have to set up a new center, we need like considering that we are doing campuses, we need like tens of crores to set up new centers. So this is going to help us expand our footprint across the country. We want to be present in all the six major markets of India. Currently, we are biggest player of Bangalore, and we look forward to establish similar position in other cities as well.
Right, let me come to expansion in just a bit, but in terms of capacity addition and inventory, how many more seats are we looking at? What's the capacity addition that will be added as you eventually go about executing this round?
Today we are at about 32,000 signed up capacity. We will grow. We expect to grow at 50%, from a sign up capacity wise. So there is another 16,000 in calendar year 27. We will be adding as signed up capacity, and there will be bigger amount of sign up that's going to happen in in 26. We'll be adding 16,000. In 27, we'll be adding much more seats.
And what are the new markets that you at Beehive will be getting into? What kind of capacity are you eyeing in these markets?
So two things that are there. One is in Bangalore. We are already close to full in all the key markets that we are there. So we will continue to expand in Bangalore as well. So there is a lot of properties already lined up in Bangalore for sign up. Some were recently signed up and announced as well. Other than that, while we do have a Mumbai presence, we are looking to expand a lot more strongly in Pune, Hyderabad, and Chennai. We have shortlisted properties there that suit our requirement. So Beehive is today a campus co-working model. We run large centers which are typically 1 lakh to 3 lakh square feet size independent buildings. So we have suitable buildings available in Pune, Hyderabad, and Chennai. So we are looking to expand.
Right, Shesh. Just coming back to Bengaluru for a moment. You have a sizable market here, especially in the co-working category. What are growth prospects like within Bengaluru, and how is the industry poised to grow from here? And more importantly, how quickly will you be growing in comparison?
So Bangalore is very interestingly, Bangalore is the second biggest co-working market in the world. London is the biggest, Bangalore is second biggest, and New York is the third biggest. And of course, Bangalore is the biggest in India. And Bangalore is a very dynamic market, will continue to grow very, very strongly. We are probably at this stage, we may be at about 4% size within Bangalore, like Beehive. Couple of years back, we were probably 1% of Bangalore. So we are actually growing faster than the market. We do expect to grow, consolidate significant leadership position in Bangalore. So, my goal would be to take our market share to like 10% in Bangalore. So that's where we would continue to grow. But other cities like you would probably know, Hyderabad is winning a lot of GCC deals, etc. Pune has been seeing a lot of traction. So it's important. We have come to a stage where our investors also want us to, spread ourselves, not to be too dependent on one single city. And in fact, customers also, a lot of them have been asking us, because Beehive is a very, very differentiated brand. We offer, pickleball, shower, football, box cricket, etc. We create a campus environment which nobody has been creating. So there is a lot of demand. A lot of people from other cities have been asking us to join there. So that's the direction we're taking.
Right, Shesh, you talk about investors, and even as this pre-IPO round is raised in the run-up to 2027 when you hope to list, where are you at with regard to investor interest itself? Do all your investors continue to stay all in, or is anyone looking to exit?
So one thing interesting to note is there are four listed players in the main board, four at least big companies that are listed. Beehive is older than all the four of them. We started in 2014. So consequently, our investors also have been there with us from a long time. We have an institutional investor as well. There are a lot of HNIs who have been there. So Beehive is more than 11 years old today. So majority of my investors were there from 10 years. I think as a responsible entrepreneur, some partial exit options at some stage has to be brought in. So that's one of the reasons. Of course, we are looking for an IPO. One reason is, of course, can we get partial exits at least to some of our investors, bring value to ESOPs. ESOPs we have been issuing from so many years. A real value will only come if they can have some kind of a liquidation situation. And access to capital is very critical. That's another reason why we are going for IPO. Is that IPO is going to be a journey, another new journey where our goal is to become biggest in the country. We believe that Beehive has much bigger addressable market than many of our, and then majority of our competition. If we are given access to capital, this is a current round will take us to IPO. IPO will take us to new league where there'll be better access to both debt and equity. And I think that will really consolidate our leadership position and fasten our growth.
Well, Shesh, on that forward-looking note, thanks so much for joining us and breaking down all those insights, even as Beehive there has announced that it's in the final stage of raising that 400 crore rupee fund. Well, moving on now, from Bengaluru's co-working spaces to politics, the central government's recent decision to rename India's historic Mahatma Gandhi National Rural Employment Guarantee Act, or the MNREGA scheme, has brewed into a political storm. The bone of contention really has to do with the removal of Mahatma Gandhi's name itself from the scheme and replacing it with a Viksit Bharat Guarantee for Rozgar and Ajivika Mission Gramin Bill 2025, or quite simply, the VG Ramji Bill. Early today, the Lok Sabha passed the VG Ramji Bill amid an uproar from opposition members of parliament. And across the country, especially in cities like Bengaluru, where the Congress is in power, MLAs have sat in protest against this decision. In fact, visibly charged DK Shivkumar even challenged the BJP to remove Gandhi's name from currency notes if they were so particular on erasing the legacy of the Mahatma himself. Well, on that note, it's a wrap on this edition of South Central. Thanks so much for watching. In the meanwhile, keep staying tuned to ET Now for more market news and action. For the moment, though, it's goodbye from us.
In association with SBI, the banker to every Indian truly.
From bullion to barrels, steel to sugar, every commodity tells a story.
They move economies. Behind every price swing is a signal.